If the global indices were to react to any dramatic election aftershocks, we might be in for a temporary yet gut-wrecking ride to the downside. One that will bring everything down with it. If this were to occur, I will treat it as a grand buy opportunity. Here are the key support levels in a series of stocks in which I will go all in. It should come as no news that the market is highly fragile at the moment. This might be the eye of the election storm. Most of the election itself is priced in already, but we may have reason to expect some drama in the upcoming days or weeks. Trump losing and accusing the election of being rigged could certainly be something that could cause a steep reaction on the market, especially in times when the political and social tensions are already high. But even if we were to get a minor crash, with or without added drama, I will personally, and until proven wrong, treat any index plunge as a mere correction. A temporary post-Halloween scare if you want. Oogity boogity boo! For the real scare is yet to come. I'm talking about the crash of a lifetime, the alpha crash. Now, presuming that I've done my technical research properly and that any upcoming plunge is just a mere correction, no matter how bloody it may come across in the moment, we will in this episode go through the key support levels in a variety of stocks in which I'm looking at entering some solid swing positions at possibly panicky discounts. However, we won't go through the technicals in detail because of time shortage.
Oh my goodness biscuits! I'm late!
The levels themselves are all that matter right now. And do bear in mind that all the levels I'm about to present are dependent on a further index drop of -3 to -10%. But if the index were to drop more than that, then these support levels presented throughout this episode may cease to be relevant. With that said, I don't expect any further moves steeper than -10% just yet. And also bear in mind that the previous parabolic tendencies that I've talked at length about are still in play. This could very well amount to a grand buying opportunity for a final wave 5 before times of turmoil. But first, not financial advice. This episode is for educational and entertainment purposes only. And if this episode helps you better understand the current market situation and what lies ahead, then please use the internet currency of likes, shares and subscribes to show your support. It costs you nothing and it helps the channel a lot. Now, let's begin by looking at the bigger picture. But despite the minor rally, the index does, together with a wide variety of stocks, show clear characteristics of a bearish continuation. For this move up here is nothing surprising at all, and I don't expect us to get off the hook this easily. However, that doesn't mean the indices cannot go up by more. It simply means things look ambivalent and weak, and that this week's move up can rapidly turn downwards. The weak RSI on the daily sure supports this thesis. Having said that, let's cut to the chase of high-octane stocks and their respective key support levels at which I will fill up to the last penny if or when we get a temporary plummet, correction, whatever you want to call it. As mentioned on Twitter, I took a 5.5 to 1 swing trade in this one to exploit the correctional move. This one has now been released and cashed in on. What I'm looking for now is either the support zone between 1290 and 1390 or else the primary trend line. These respective levels would amount to a -9 to -15% move or a -30% move if the index really goes south. The ideal scenario would be if the weekly RSI were to close on the lower bullish red. That would be incredibly bullish. For more on this, please watch the RSI trilogy. 38 kroner for a 25 to 30% drop. This would nicely match the 618 fib, the previous local high, as well as the horizontal support it amounts to, the EMA 200 and finally the green Ichimoku Kumo. For the latter to be a support level, it presumes it will be tested prior to November 18th. As discussed in this technical analysis episode in late December, I didn't expect Kancera to recover easily from its massive blow, and nor has it. Instead, it has rather been crawling around on the floor just like predicted. Having said that, the long-term trend is still rock solid. Now, upon an index correction, there are two key levels at which I'll be looking at an entry. The first one is the strong horizontal support at 215, which is also backed up by the previous local bottom and June top. This level is also supported by the EMA 200 on the daily. Next after that we have the 1.84 level, which too is a strong horizontal support, but more importantly the EMA 200 on the weekly together with the 618 fib. Such drop would also likely coincide with a lower bullish red RSI closing, which would be massive. Given Kancera's strong trend, I thoroughly expect either of these levels to form a new firm base upon any severe index correction. I've been waiting for this baby to drop to my target zone since late September, and back then that support zone may have seemed blurry and distant. Not so much anymore. The target zone is at 1580 to 1840, as this is both a significant historical support zone as well as the 786 fib, the last resort. The fib itself is at 1840, however I hardly expect it to just bounce there and take off again. The ideal scenario, which would be incredibly bullish, would be if the price were to spike deep into this red support zone but close at the top of it, at the fib that is. Any drop this significant and steep, no matter how bad the fundamentals, is typically followed by a release rally. Do note that the steepness is key here, for had Realfiction declined the same percentage but over the course of half a year, I'd rather play roulette for that same money. For at least in roulette, I'd stand a chance at winning.
31. Black.
And regarding targets, we'll go over them in detail once we get an entry. 1850 to 19 kroner. This is based on the primary trendline on the log scale, which coincides with the EMA 200 on the daily chart and the 618 fib. Sometimes technical analysis isn't any more difficult than that. There are two technical levels that are significant in Tesla. One is the 382 fib at 335, which coincides with the support zone between 335 and 355. A spike touch on the fib level followed by a closing on the primary trendline would be very bullish news indeed. This would amount to a 16% drop from the current levels. And if not, then the 0.5 fib at 285, which coincides with the horizontal support as well as the EMA 200 on the daily, would be the next level of support. This one is less likely, but would amount to a minus 28% plummet should it occur. Some may protest that this would break the primary trend line. However, breaking a trend line doesn't automatically amount to a reversal. Often enough, it rather signifies a delayed continuation pattern, such as a sideways range prior to having amassed enough power to proceed higher. Added to the short-term Tesla equation is an ambivalent RSI. Technically, it's still within a bullish red channel, however, it has on 4 recent occasions failed to break above the upper bearish blue line, which on its own is very bearish news. This ambivalence makes perfect sense and bodes the way for a move in either direction. No directional clues here. And for a full tutorial on how to properly use the RSI, please watch the RSI trilogy. It will change everything you thought you knew about this remarkable indicator. In fact, it will open up an entire new world within trading. I like to say this is an easy one, but I'm not gonna do that because I'm probably gonna end up having to eat my own words. But we're talking a retest of the primary trend line, the 618 and 786 fibs, the EMA 200 and the horizontal support from the early 2020 all-time high. This level here at around 1410 is massive. It would equate to a minus 25 to minus 30% drop from the current levels and would hence make sense if the index were to drop into the minus 3 to minus 10% level, particularly leaning towards the latter. Although my mid to long-term targets in Zwipe still stand, a steeper correction would be duly needed in this one, and it would sure be something I appreciate for a more sustainable upwards move. The support zone I deem the most likely is the previous local bottom at 1320 to 1390. This would also coincide with the 0.5 fib and would constitute a roughly 30% drop from the current levels. Now, this one is a truly interesting case that I'd normally share my thoughts on. But as I recently tried to reach out to this toxic cult of a community, it was met with sheer hostility. The entire forum was rather a tragic compilation of wrath, humiliation and intimidation. And for that reason, I'm gonna leave this jolly good lot in peace while they do what they can to drown themselves in their own ocean of hate. For those are the rare type of people who would stab you in the face if you were to ever show up with a lifeboat to save them. For do unto others what you would have them do unto you. And living by those words, to the rest of you, dear fantastic viewers, I adore you all and I wish nothing else but for this episode to help you identify some truly attractive and high-octane entry spots. We'll follow up on all these prospects as they come, and we'll navigate through this likely stormy journey ahead of us together and in the most profitable fashion possible. For to you, my dear viewers, my regulars in particular, and I'm talking directly to you here, my lifeboat has always got room for you. Never forget that. That was all for now. Thank you and goodbye.